At best kept secret 510 shushing face zipper mouth face nerd face YouTube. Publication 4681. Cat. No.51508f cancelled debts, foreclosures, repossessions, and abandonments. Contents. Reminder. 2. Introduction. 2. Common situations covered in this publication. 2. Chapter 1. Cancelled debts. 3. Form 1099-C. 3. Discounts and loan modifications. 4. Sales or other dispositions, such as foreclosures and repossessions. 4. Abandonments. 4. Stockholder debt. 4. Exceptions. 4. Gifts, bequests, devises, and inheritances. 4. Student loans. 4. Deductible debt. 5. Price reduced after purchase. 5. Home affordable modification program. 5. Exclusions. 5. Bankruptcy. 5. Insolvency. 5. Insolvency worksheet. 6. Qualified farm indebtedness. 7. Qualified real property. Business indebtedness. 8. Qualified principal residence indebtedness. 9. Reduction of tax attributes. 10. Qualified principal residence indebtedness. 10. Bankruptcy and insolvency. 10. Qualified farm indebtedness. 11. Qualified real property business indebtedness. 11. Chapter 2. Foreclosures and repossessions. 12. Worksheet for foreclosures and repossessions. 13. Chapter 3. Abandonments. 13. Chapter 4. How to get tax help. 14. Future developments. For the latest information about developments related to Pub. 4681, such as legislation enacted after it was published, go to irs.gov/pub 4681. What's new? Application of bankruptcy and insolvency exclusions to grantor trusts and disregarded entities. Regulations Section 1.1089 clarifies that if a grantor trust or disregarded entity is a debtor in a bankruptcy case under Title Department of the Treasury, Internal Revenue Service, Publication 4681 Cat. No.51508f. Cancelled debts, foreclosures, repossessions, and abandonments, for individuals. For use in preparing 2016 returns. Get forms and other information faster and easier at irs.gov, English irs.gov/Spanish, Espanol irs.gov/Chinese, Zhonghuian. irs.gov/Korean, Hengyugeo irs.gov/Russian, Puskij irs.gov/Vietnamese, Tiengviet. February 1, 2017. 11. But the owner of the grantor trust or disregarded entity isn't. Then the owner can't use the bankruptcy exclusion to exclude from his or her income the debt of the bankrupt grantor trust or disregarded entity that was cancelled in the bankruptcy. The regulation also clarifies that if a grantor trust or disregarded entity is insolvent, but the owner of the grantor trust or disregarded entity is solvent, then the owner can't use the insolvency exclusion to exclude from his or her income the cancelled debt of the insolvent grantor trust or disregarded entity. The specific rules in Regulations Section 1.1089 apply to discharge of indebtedness income occurring after June 9, 2016. Real property used in a trade or business. Revenue Ruling 2016-15 clarifies that for purposes of the exclusion of qualified real property business indebtedness, real property used in a trade or business doesn't include real property developed and held primarily for sale to customers in the ordinary course of business. See Revenue Ruling 2016-15, 2016-26 IRB 1060, available at www.irs.gov/erb/2016-26_erb/AR08. HTML. Reminder. Photographs of missing children. The Internal Revenue Service is a proud partner with the National Center for Missing and Exploited Children (NCMEC). Photographs of missing children selected by the Center may appear in this publication on pages that otherwise would be blank. You can help bring these children home by looking at the photographs and calling 1-800-THAT-LOST 1-800-843-5678 if you recognize a child. Introduction. This publication explains the federal tax treatment of canceled debts, foreclosures, repossessions, and abandonments. Generally, if you owe a debt to someone else and they cancel or forgive that debt for less than its full amount, you are treated for income tax purposes as having income and may have to pay tax on this income. Note: this publication generally refers to debt that is canceled, forgiven, or discharged for less than the full amount of the debt as canceled debt. Sometimes a debt, or part of a debt, that you don't have to pay isn't considered canceled debt. These exceptions are discussed later under exceptions. Sometimes a canceled debt may be excluded from your income. But if you do exclude canceled debt from income, you may be required to reduce your tax attributes. These exclusions and the reduction of tax attributes associated with them are discussed later under exclusions. Foreclosure and repossession are remedies that your lender may exercise if you fail to make payments on your loan and you have previously granted that lender a mortgage or other security. Interest in some of your property. These remedies allow the lender to seize or sell the property securing the loan. When your property is foreclosed upon or repossessed and sold, you are treated as having sold the property and you may recognize taxable gain. Whether you also recognize income from canceled debt depends in part on whether you are personally liable for the debt and in part on whether the outstanding loan balance is more than the fair market value (FMV) of the property. Figuring your gain or loss and income from canceled debt arising from a foreclosure or repossession is discussed later under foreclosures and repossessions. Generally, you abandon property when you voluntarily and permanently give up possession and use of property you own with the intention of ending your ownership but without passing it on to anyone else. Figuring your gain or loss and income from canceled debt arising from an abandonment is discussed later under abandonments. Comments and suggestions. We welcome your comments about this publication and your suggestions for future editions. You can send us comments from irs.gov/formspubs. Click on More Information, and then on Give Us Feedback. Or you can write to Internal Revenue Service Tax Forms and Publications 1111 Constitution Avenue, NW, IR 6526 Washington, D.C. 20224. We respond to many letters by telephone. Therefore, it would be helpful if you would include your daytime phone number, including the area code, in your correspondence. Although we cannot respond individually to each comment received, we do appreciate your feedback and will consider your comments as we revise our tax products. Ordering forms and publications. Visit irs.gov/formspubs to download forms and publications. Otherwise, you can go to irs.gov/orderforms to order current and prior year forms and instructions. Your order should arrive within 10 business days. Tax questions. If you have a tax question not answered by this publication, check irs.gov and how to get tax help at the end of this publication. Useful items you may want to see. Publication. Farmer's Tax Guide. Tax Guide for Small Business for individuals who use Schedule C or CEZ. Selling your home. Taxable and non-taxable income. Net operating losses (NOLs) for individuals, estates, and trusts. Corporations. 225,334. 523,525,536. 542. Sales and other dispositions of assets. Basis of assets. Bankruptcy Tax Guide. Form and instructions. Reduction of tax attributes due to discharge of indebtedness and Section 1082 basis adjustment. Cancellation of debt. Dividends and distributions. General business credit. Common situations covered in this publication. The sections of this publication that apply to you depend on the type of debt canceled, the tax attributes you have, and whether or not you continue to own the property that was subject to the debt. Some examples of common circumstances are provided in the following paragraphs to help guide you through this publication. These examples don't cover every situation but are intended to provide general guidance for the most common situations. Non-business credit card debt cancellation. If you had a non-business credit card debt canceled, you may be able to exclude the canceled debt from income if the cancellation occurred in a Title 11 bankruptcy case or you were insolvent immediately before the cancellation. You should read Bankruptcy or Insolvency Under Exclusions in Chapter 1 to see if you can exclude the canceled debt from income under one of those provisions. If you can exclude part or all of the canceled debt from income, you also should read Bankruptcy and Insolvency Under Reduction of Tax Attributes in Chapter 1. Personal vehicle repossession. If you had a personal vehicle repossessed and disposed of by the lender during the year, you will need to determine your gain or non-deductible loss on the disposition. This is explained in Chapter 2. If the lender also canceled all or part of the remaining amount of the loan, you may be able to exclude the canceled debt from income if the cancellation occurred in a Title 11 bankruptcy case or you were insolvent immediately before the cancellation. You should read Bankruptcy or Insolvency Under Exclusions in Chapter 1 to see if you can exclude the canceled debt from income under one of those provisions. If you can exclude part or all of the canceled debt from income, you also should read Bankruptcy and Insolvency Under Reduction of Tax Attributes in Chapter 1. Main home foreclosure or abandonment. If a lender foreclosed on your main home during the year, you will need to determine your gain or loss on the foreclosure. Foreclosures are explained in Chapter 2 and abandonments are explained in Chapter 3. If the lender also canceled all or part of the remaining amount on the mortgage loan, and you were personally liable. 544, 551,908, 982, 1099 C1099 DIV 3800. Page 2 Publication 4681, 2016. For the debt, you also should read Qualified Principal Residence Indebtedness Under Exclusions in Chapter 1 to see if you can exclude part or all of the canceled debt from income. Main home loan modification workout agreement. If a lender agrees to a mortgage loan modification, a workout, that includes a reduction in the principal balance of the loan, you should read Qualified Principal Residence Indebtedness Under Exclusions in Chapter 1 to see if you can exclude part or all of the canceled debt from income. If you can exclude part or all of the canceled debt from income, you also should read Qualified Principal Residence Indebtedness Under Reduction of Tax Attributes in Chapter 1. 1. Canceled debts. This chapter discusses the tax treatment of canceled debts. General rules. Generally, if a debt for which you are personally liable is forgiven or discharged for less than the full amount owed, the debt is considered canceled in whatever amount it remained unpaid. There are exceptions to this rule, discussed under exceptions later. Generally, you must include the canceled debt in your income. However, you may be able to exclude the canceled debt. See exclusions later. Example: John owed $1,000 to Mary. Mary agreed to accept and John paid $400 in satisfaction of the entire debt. John has canceled debt of $600. Example: Margaret owed $1,000 to Henry. Henry and Margaret agreed that Margaret would provide Henry with services instead of money in full satisfaction of the debt. Margaret doesn't have canceled debt. Instead, she has income from services. A debt includes any indebtedness for which you are liable, or subject to which you hold property. Debt for which you are personally liable is recourse debt. All other debt is non-recourse debt. If you aren't personally liable for the debt, you don't have ordinary income from the cancellation of debt unless you retain the collateral in either. The lender offers a discount for the early payment of the debt, or the lender agrees to a loan modification that results in the reduction of the principal balance of the debt. See discounts and loan modifications later. However, upon the disposition of the property securing a non-recourse debt, the amount realized includes the entire unpaid amount of the debt, not just the FMV of the property. As a result, you may realize a gain or loss if the outstanding debt immediately before the disposition is more or less than your adjusted basis in the property. For more details on figuring your gain or loss, see Chapter 2 of this publication or see Pub. 544. Sales and other dispositions of assets. There are several exceptions and exclusions that may result in part or all of a canceled debt being non-taxable. See exceptions and exclusions later. You must report any taxable canceled debt as ordinary income on Form 1040 or Form 1040 NR, line 21, if the debt is a non-business debt. Schedule C, Form 1040, line 6, or Schedule CEZ, Form 1040, line 1, if the debt is related to a non-farm sole proprietorship. Schedule E, Form 1040, line 3, if the debt is related to non-farm rental of real property. Form 4835, line 6, if the debt is related to a farm rental activity for which you use Form 4835 to report farm rental income based on crops or livestock produced by a tenant. Or Schedule F, Form 1040, line 8, if the debt is farm debt and you are a farmer. Form 1099-C. If you receive a Form 1099-C, that means an applicable entity has reported an identifiable event to the IRS regarding a debt you owe. The identifiable event may be an actual cancellation of the debt, or it may be an event the applicable entity is required, solely for purposes of reporting to the IRS, to treat as a cancellation of debt. For information on the reasons an applicable entity files Form 1099-C, see Identifiable Event Codes later. Unless you meet one of the exceptions or exclusions discussed later, this canceled debt is ordinary income and must be reported on the appropriate form discussed above. An applicable entity includes 1. A financial institution. 2. A credit union. 3. Any of the following, its successor, or subunit of one of the following. A. The Federal Deposit Insurance Corporation (FDIC). B. The Resolution Trust Corporation (RTC) circa. The National Credit Union Administration (NCUA). Or D. Any other federal executive agency, including government corporations, any military department, the U.S. Postal Service, or the Postal Rate Commission. 4. A corporate subsidiary of a financial institution or credit union, if the affiliation subjects the subsidiary to federal or state regulation. 5. A federal government agency, including a department, an agency, a court or court administrative office, or a judicial or legislative instrumentality. 6. Any organization, a significant trade or business of which is lending money. For more information on the applicable entities that must file a Form 1099-C, see the 2016 instructions for Forms 1099-A and 1099-C, available at irs.gov/pub/ers-prior/I1099-AC-2016.pdf. Identifiable Event Codes. Box 6 of Form 1099-C should indicate the reason the creditor filed this form. The codes shown in Box 6 are explained below. Also see the chart after the explanation for a quick reference guide for the codes used in Box 6. Note: Codes A through G and I identify specific occurrences involving an actual discharge of indebtedness. However, Code H, Expiration of Non-Payment Testing Period, identifies an occurrence that doesn't necessarily involve an actual discharge of indebtedness. Code A, Bankruptcy. Code A is used to identify cancellation of debt as a result of a Title 11 bankruptcy case. See Bankruptcy later. Code B, Other Judicial Debt Relief. Code B is used to identify cancellation of debt as a result of a receivership, foreclosure, or similar federal or state court proceeding other than bankruptcy. Code C, Statute of Limitations or Expiration of Deficiency Period. Code C is used to identify cancellation of debt either when the statute of limitations for collecting the debt expires or when the statutory period for filing a claim or beginning a deficiency judgment proceeding expires. In the case of the expiration of a statute of limitations, an identifiable event occurs only if and when your affirmative defense of the statute of limitations is upheld in a final judgment or decision in a judicial proceeding, and the period for appealing the judgment or decision has expired. Code D, Foreclosure Election. Code D is used to identify cancellation of debt when the creditor elects foreclosure remedies that statutorily end or bar the creditor's right to pursue collection of the debt. This event applies to a mortgage lender or holder who is barred from pursuing debt collection after a power of sale in the mortgage or deed of trust is exercised. Code E. Debt relief from probate or similar proceeding. Code E is used to identify cancellation of debt as a result of a probate court or similar legal proceeding. Code F. By agreement. Code F is used to identify cancellation of debt as a result of an agreement between the creditor and the debtor to cancel the debt at less than full consideration. Code G. Decision or policy to discontinue collection. Code G is used to identify cancellation of debt as a result of a decision or a defined policy of the creditor to discontinue collection activity and cancel the debt. For purposes of this identifiable event, a defined policy. Chapter 1 Cancelled Debts page 3 includes both a written policy and the creditor's established business practice. Code H. Expiration of non-payment testing period. Code H is used to indicate that the creditor hasn't received a payment on the debt during a testing period ending on December 31, 2016. The testing period is a 36-month period increased by the number of months the creditor was prevented from engaging in collection activity by a stay in bankruptcy or similar bar under state or local law. This identifiable event applies only for a creditor that is a financial institution or credit union, and certain of their subsidiaries, the FDIC, the RTC, the NCUA, any other federal executive agencies, and any successor or subunit of the FDIC, the RTC, the NCUA, or a federal executive agency. Expiration of the non-payment testing period doesn't necessarily result from an actual discharge of indebtedness. Code I. Other actual discharge before identifiable event. Code I is used to identify an actual cancellation of debt that occurs before any of the identifiable events described in codes A through H. Form 1099C Reference Guide for Box 6 Identifiable Event Codes. A bankruptcy. B. Other judicial debt relief. C. Statute of limitations or expiration of deficiency period. D. Foreclosure election. E. Debt relief from probate or similar proceeding. F. By agreement. G. Decision or policy to discontinue collection. H. Expiration of non-payment testing period. I. Other actual discharge before identifiable event. Even if you didn't receive a Form 1099-C, you must report canceled debt as gross income on your tax return unless one of the exceptions or exclusions described later applies. Amount of canceled debt. The amount in Box 2 of Form 1099-C may represent some or all of the debt that has been canceled or treated as canceled. The amount in Box 2 will include principal and may include interest and other non-principal amounts such as fees or penalties. Unless you meet one of the exceptions or exclusions discussed later, the amount of the debt that has been canceled is ordinary income and must be reported on the appropriate form as discussed earlier. Interest included in canceled debt. If any interest is included in the amount of canceled debt in Box 2, it will be shown in Box 3. Whether the interest portion of the canceled debt must be included in your income depends on whether the interest would be deductible if you paid it. See deductible debt under exceptions, later. Persons who each receive a Form 1099-C showing the full amount of debt. If you and another person were jointly and severally liable for a canceled debt, each of you may get a Form 1099-C showing the entire amount of the canceled debt. However, you may not have to report that entire amount as income. The amount, if any, you must report depends on all the facts and circumstances, including state law, the amount of debt proceeds each person received, how much of any interest deduction from the debt was claimed by each person, how much of the basis of any co-owned property bought with the debt proceeds was allocated to each co-owner, and whether the canceled debt qualifies for any of the exceptions or exclusions described in this publication. See Example 3 under Insolvency, later. Discounts and loan modifications. If a lender discounts, reduces, the principal balance of a loan because you pay it off early, or agrees to a loan modification, a workout, that includes a reduction in the principal balance of a loan, the amount of the discount or the amount of principal reduction is canceled debt. However, if the debt is non-recourse and you didn't retain the collateral, you don't have cancellation of debt income. The amount of the canceled debt must be included in income unless one of the exceptions or exclusions described later applies. For more details, see exceptions and exclusions later. Sales or other dispositions such as foreclosures and repossessions. Recourse debt. If you owned property that was subject to a recourse debt in excess of the FMV of the property, the lender's foreclosure or repossession of the property is treated as a sale or disposition of the property by you and may result in your realization of gain or loss. The gain or loss on the disposition of the property is measured by the difference between the FMV of the property at the time of the disposition and your adjusted basis, usually your cost, in the property. The character of the gain or loss, such as ordinary or capital, is determined by the character of the property. If the lender forgives all or part of the amount of the debt in excess of the FMV of the property, the cancellation of the excess debt may result in ordinary income. The ordinary income from the cancellation of debt, the excess of the cancelled debt over the FMV of the property, must be included in your gross income reported on your tax return unless one of the exceptions or exclusions described later applies. For more details, see exceptions and exclusions later. Non-recourse debt. If you owned property that was subject to a non-recourse debt in excess of the FMV of the property, the lender's foreclosure on the property doesn't result in ordinary income from the cancellation of debt. The entire amount of the non-recourse debt is treated as an amount realized on the disposition of the property. The gain or loss on the disposition of the property is measured by the difference between the total amount realized, the entire amount of the non-recourse debt plus the amount of cash and the FMV of any property received, and your adjusted basis in the property. The character of the gain or loss is determined by the character of the property. More information. See Chapter 2 of this publication in Pubs. 523, 544, and 551 for more details. Abandonments. Recourse debt. If you abandon property that secures a debt for which you are personally liable, recourse debt, and the debt is cancelled, you will realize ordinary income equal to the cancelled debt. You must report this income on your tax return unless one of the exceptions or exclusions described later applies. For more details, see exceptions and exclusions later. This income is separate from any amount realized from the abandonment of the property. For more details, see Chapter 3. Non-recourse debt. If you abandon property that secures a debt for which you aren't personally liable, non-recourse debt, you may realize gain or loss but won't have cancellation of indebtedness income. Stockholder debt. If you are a stockholder in a corporation and the corporation cancels or forgives your debt to it, the cancelled debt is a constructive distribution. For more information, see Pub. 542, Corporations. Exceptions. There are several exceptions to the requirement that you include cancelled debt in income. These exceptions apply before the exclusions discussed later and don't require you to reduce your tax attributes. Gifts, bequests, devises, and inheritances. In most cases, you don't have income from cancelled debt if the debt is cancelled as a gift, bequest, devise, or inheritance. Student loans. Certain student loans provide that all or part of the debt incurred to attend a qualified educational institution will be cancelled if the person who received the loan works for a certain period of time in certain professions for any of a broad class of employers. If your student loan is cancelled as the result of this type of provision, the cancellation of this debt isn't included in your gross income. To qualify for this treatment, the loan must have been made by 1. The federal government, a state or local government, or an instrumentality, agency. Caution. Page 4 Publication 4681, 2016, or subdivision of one of those governments. 2. A tax-exempt public benefit corporation that has assumed control of a state, county, or municipal hospital, and whose employees are considered public employees under state law, or 3. An educational institution, defined later a. under an agreement with an entity described in 1 or 2, that provided the funds to the institution to make the loan, or b. as part of a program of the institution designed to encourage students to serve in occupations or Google to read more information. I Googled different IRS publication and even their manual. When you want information, go to the source.